It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Taking a breather, futures on the rise after a stock's three-day losing streak. Yields retreating from multi-year highs. Nvidia front and center today, investors awaiting the chipmaker's report card and seeing about its growing competition. And state primaries test President Trump's grip on his Republican base ahead of the midterms. Let's get a check now on the last few hours of action around the world and markets. We'll start in Tokyo with Alice French for the latest from Asia. Alice.
Good morning. Yes, look, a down day for us here in Asia, with the Nikkei seeing actually its fifth straight day of declines. That's the longest losing streak since January. I think a lot of people taking money off the table in the AI trend ahead of Nvidia's earnings. Kospi as well, another down day. Some news that the Samsung union is planning a strike, really hitting sentiment there, although Samsung stock itself did manage to pare some of those losses later in the session. And moving away from stocks into bonds, we had some relief for the bond market today from a stronger than average demand for the 20-year bond sale. The yield on the 20-year JGB actually dropping as much as 10 basis points at one point. But of course, those yields are still up there, close to multi-decade highs. There is still quite a lot of jitters around those kind of yields and the fiscal concern that's hitting the stock market as well, I think. But yeah, Nvidia's earnings are really going to determine where things go from here.
Yes, I have a feeling that's going to be a global story. Alice, thank you so much. That's Alice French. Now to London for a look at Europe. Here's Charlie Wells. Charlie.
Good morning, Vonnie. So yes, we are seeing some yield relief across the continent here in Europe as well, particularly in the UK, which has had such a tough time in the bond market recently. What we have seen is the softest inflation rate coming from the UK in about a year. So we're seeing a decline in that 10-year yield of some 9 basis points, kind of outcompeting on that decline today. But again, still, those rates are elevated given some of the uncertainty that we've seen here in the UK. Let's flip and talk about stocks, because it's been a really interesting story yesterday that Euro Stoxx 600 had a pretty strong day. They were buoyed on the back of some pretty significant earnings reports showing strength from some of these companies. But there's been a little bit less movement, at least so far today. So trying to see how a lot of these companies kind of return some of the earnings, and again, waiting for those Nvidia results, which have implications for semiconductor companies here in Europe.
Charlie, thank you so much. Charlie Wells there in London. A similar story here in the United States. A little relief on yields, if you like, but really we're so much more elevated than we were even just yesterday morning. Like, look at the 30-year yield, we're above 516, down almost 2 basis points, albeit. At the front end, 408.69, so much higher than we were at the end of last week even, but we are down 3 basis points today. Now, part of the reason is oil dropping, and dropping more precipitously in the last few minutes. You see New York crude, which has rolled over to the July contract, that's trading at 101.83, well below where we were yesterday. And Brent crude down more than 2%. It dropped, like I say, just another few cents in the last few minutes. We are seeing futures pointed higher today, NASDAQ futures in particular, possibly with some Nvidia optimism out there, but we are coming off the back of 2 days of declines just this week alone. All right, let's get to some individual movers. Here is Chloe Melly in London.
Good morning, Bonnie. Nvidia is, of course, the big story of the day ahead of the earnings later today. And investors are very keen to hear about efforts to ramp up production and to fend off competitors. And it seems that the market is overall quite optimistic, quite positive ahead of the earnings later. And we have got shares up about 1%. It's also, those earnings are also going to be about the general health and state of the AI economy. And so seeing the broader chip making sector move on the back of that, and Intel in particular actually up about 4% in pre-market trading. And finally, we have got Carver also in focus this morning, the restaurant chain. It has beat analyst expectations, and this really pushes back against fears of a broader downturn in that restaurant business. And there's one item in particular that did really well, and that is the pomegranate glazed salmon. So it might be a little bit too early in the day to talk about fish, but that was a very big boost for that company, and we're up almost 7% in pre-market trading on the back of those results.
Sounds delicious. Chloe, thank you so much. Chloe Melly there in London. Coming up this hour, we're going to be speaking with RBC's Amy Wu Silverman. She'll join as she sees investors going from wait and see to full-on FOMO. Investors staying focused on Nvidia earnings today, though, scheduled for after the market close. Results from the world's most valuable company should give us an update on the state of the AI economy as we see record investment across many industries. Tom McKenzie, host of Bloomberg Tech Europe, joins us now. So, Tom, we are expecting particularly data center revenue to grow more than 85%, 88%, I think is the exact number. I mean, will that be considered a good quarter for Nvidia?
I mean, typically, in fact, in recent quarters, Nvidia's come through with earnings beats, and the markets and investors have reacted negatively to that. There's been this stretched expectation versus delivery in terms of how investors think about this company. That's up about 18%. The share's up about 18% year to date, and that has underperformed the broader semiconductor space. I think you're right. Look, the data center part of the business is absolutely front and center for Nvidia. That is essential in terms of thinking about GPUs and the move from Blackwell to Rubin. And so it's the demand picture out of the data centers, the forecast that's going to be really, really interesting. Yes, you're right. For the current quarter, first quarter, sales overall for the business expected to come in at about 80% increase for the first quarter. But it will be the guidance in terms of giving us an indication around demand. There's very few signs that demand is letting up for these AI accelerators that Nvidia produces. It may be more about whether or not they can actually supply that demand and whether or not they continue to have that hold on the supply chain to meet that demand. And that will also be in focus for investors with these earnings.
So we have a little bit of a problem with Samsung and its largest labor union. Talks broke down, and that's threatening a chip plant supply. It could actually, if it continues on, disrupt the whole global chip supply. Tom, what's the story?
Yeah, look, this is the world's largest supplier of chips, so this could have a major impact on global supply chains at a time, of course, when the markets and global economies and companies are wrestling with higher chip prices, and particularly high bandwidth memory, in which Samsung provides quantities, huge quantities to data centers. So this has significance to the AI story, but also more broadly as well. If indeed this strike goes and comes through, it could happen on Thursday. But we know that workers there are pushing for a cut of the profits. Samsung stock, again, up more than about 100% year to date. That has performed very strongly, particularly because the pricing around these chips has increased, the massive demand and the fact that there is a shortage of supply, and Samsung has benefited as a result of that. Workers now want a slice of those profits. So at this point, we're getting very close to the deadline, and negotiations remain very, very heated. They are saying, the workers' union saying, they are getting ready to strike. We'll see if it happens. Again, if it does, it will be significant for the supply chain around semiconductors.
Absolutely. Also significant for Silicon Valley workers, Meta has begun its cuts, 8,000 jobs globally, and we've already heard of Meta starting in Singapore.
Yes, and to be clear, we knew that this was coming. This had been flagged. Bloomberg has reported on it, but this is the day when it happens. So obviously, on a kind of personal level, very significant for those employees affected at Meta. And coming just a day, and we discussed this yesterday, after Meta was looking to shift roles, about 7,000 roles and 7,000 workers into additional and different roles. Now they are starting to implement those previously flagged 8,000 job cuts, as you say, starting in Singapore, and those memos will be dropping into the inboxes of other employees throughout the world of Meta today. And they started, as you say, in Singapore, 8,000 jobs. That's about 10%, almost 10% of Meta's overall workforce.
Massive, massive amount of jobs. Tom, thank you so much. Bloomberg's Tom McKenzie there. Over in Beijing, Chinese Premier Xi Jinping and his Russian counterpart reinforcing the two nations' ties on President Vladimir Putin's state visit. Discussions between the two included the conflict in the Middle East. Bloomberg's China economy and government editor Alan Wong joins us now from Hong Kong. So ostensibly and for most of the real reason for this visit was to talk about the Siberia 2 gas line, Alan, but apparently the two talked a lot about wars, and not really the Russia-Ukraine war, but more about the Middle East. What did China tell Putin?
Yeah, that's right. They spent a lot of time talking about the conflict in the Middle East. And China made very clear that it wants peace back to the region as soon as possible. And the Chinese President Xi Jinping said that resuming the war is unacceptable. This coming just hours after U.S. President Trump said that he threatened a big hit to Iran if it doesn't agree to the terms for ceasefire. So yeah, that's what Xi told Putin. And in addition to that, they did signed some agreements spanning trade, technology, and other areas of cooperation. But the overall takeaway is just that China and Russia's ties are ironclad, and then both leaders exchanged really warm words about one another, with Putin saying that one day apart is like 3 autumns, which is a Chinese saying that people used to use to describe how much one misses the other. So overall, the trajectory of that relationship is very clear, even if the situation in the Middle East is less so.
So then what kind of leverage does China have over Russia on the issue of the Middle East war? I mean, Premier Xi can say what he wants, but essentially Vladimir Putin can also do what he wants, and it's not going to affect the relationship, is it?
Yeah, given that they have repeatedly vowed to uphold their no-limits partnership, I think they will not be talking about such strong terms like leverage or bargaining chips. They'll be using a lot of rhetoric to signal that they're on the same page on many things while signing agreements to deepen their actual relationship. So it's unclear just whether China actually wants to put any pressure on Putin to help bring an end to that war. And I mean, China's role, even outside this relationship, has been quite not easily understood, because in public it has always called for a ceasefire, and it has helped mediate on the sidelines. But I mean, has it really put its thumb on the scale to end the war or do anything meaningful to help reopen the Strait of Hormuz? It's less clear. But there are plenty of reasons for China to accelerate that process, because we're seeing just how the economy slowed down. The economy's growth slowed down across the board based on data released just days earlier. And that's just one economic reason for China to do more on this front.
Amazing context, Alan. Thank you so much. Bloomberg's Alan Wong there in Hong Kong. On trade now, the EU officials gathering to finalize the long-delayed US trade deal before the July 4th deadline set up by President Trump are still talking. Bloomberg's Oliver Crook joins us now from Brussels. So what's the latest, Ollie?
Yeah, that's right. So until about 2:30 in the morning, you had deliberations on the EU side finalizing the text, the final law to bring in this trade agreement between the United States and the Europeans. Remember, this began as a handshake deal almost a year ago between Trump and Ursula von der Leyen. There have been a number of different delays, but now we have, hopefully from the European side, the finalized text of this law, and to basically bring into effect the trade deal that was agreed to about a year ago. Now the next steps is it'll have to go voted in Parliament at the European level, has to be sort of okayed by the member states. But Vani, interestingly, there were a couple of things that were added into the text here that I think are worth mentioning. For one thing, there is a suspension clause from the European side if the U.S. does anything that basically violates the trade agreement or does something completely unpredictable or threatens, for example, another set of tariffs. That's the sort of safety measure the Europeans have put in there, that they could suspend the trade deal. There is also a sunset clause. This is a trade deal that will expire theoretically from the European side, needs to be renegotiated, validated by the end of 2029. They changed that. Originally, that was going to be in March of 2028. That means that was going to actually have to be renegotiated during the Trump presidency. They have now changed that. So those are a couple of the sticking points that have still been sort of put into this text. The real question now, Vani, will the United States react to that? Will these stipulations sort of be acceptable to the United States? When we spoke to Jameson Greer a couple of weeks ago, he said he wasn't too happy about it, but I guess we'll have to wait for Truth Social over the next couple of weeks to see if there's objection for the United States and if we can get this deal in place before July the 4th, which is, of course, President Trump's deadline.
Yeah, or his stated deadline at least. Oliver, thank you so much. Oliver Crook in Brussels. Now to other top stories trending on the terminal this morning. UK inflation falling to its lowest in more than a year. CPI rose 2.8% in April compared to 3.3% the previous month. However, the decline is expected to be short-lived. The BOE predicts inflation to accelerate for the rest of the year due to the energy shock from the Iran war. Standard Chartered CEO Bill Winters seeking to reassure staff following backlash from his remarks on using AI to replace, quote, lower value human capital. In a memo, he wrote, I know this may be unsettling when reduced to simple headlines or a quote out of context. Standard Chartered plans to eliminate close to 8,000 support roles over the next 4 years. Meantime, over at HSBC, CEO George El-Hedary warning that AI will destroy certain jobs and create others. El-Hedary saying on Bloomberg's Leaders with Francine Lacroix that he was urging employees to adapt rather than resist the technological shift. HSBC is weighing deeper job cuts that could impact around 20,000 roles. Coming up, a victory in Kentucky for President Trump's candidate, a strong signal of his tight grip on Republican voters still. More on that story next. This is Bloomberg.
The winner of the race tonight is not so much Ed Gallrein. I'll come back to that. But it's the Republicans of Kentucky Congressional District 4 and their families who I will be a champion for in Washington. They're the winners.
Ed Gallrein, President Trump's endorsed pick for a congressional seat in northern Kentucky, victorious, and defeated longtime House Republican Thomas Massie. It was a strong sign of the grip that the president has on Republican voters. Joining us now from Washington is Kate Ackley of Bloomberg Government. It's interesting, Kate, because the president's national polling figures and, favorables are really in the dump, right? I mean, at the worst ever, really, of his second term. But was this frustration in particular with Massie, who had been sort of the 14-year incumbent, or a vote for the MAGA movement?
Well, this was definitely the MAGA movement came in with full force, spending big money in this race against Thomas Massie. It's always difficult to defeat an incumbent. But this, so far this year, President Trump has a pretty good record of the people that he's, taking on losing. We saw it this past weekend, even with Senator Bill Cassidy in Louisiana losing his primary against a Trump-backed opponent. And so President Trump's record of who he's, the winners he's picking in the Republican Party and reshaping the Republican Party to the way that he wants it to be, the candidates that he wants to win. He's racking up a pretty strong record so far in this midterm election cycle.
Massive amount of money went into this particular election, though. Does that take something out of the coffers for November, or will they just raise more?
Well, there was also outside money from groups that are not necessarily specific to MAGA, if you will. We saw the AIPAC, the American Israel Public Affairs Committee, come in and also spend big against Thomas Massie, who has voted against funding for Israel issues on Capitol Hill before. So there was a real coalition here of outside groups, including President Trump and the MAGA outside groups coming in and spending against Massie. And, I think some of what my sources are telling me, looking ahead to next week, a week from yesterday, on May 26th, there's a big primary coming, a primary runoff in the Texas Senate race. And that's one where a lot of my sources are saying Republicans are costing themselves a lot of extra money. They've got, of course, incumbent Senator John Cornyn in a runoff against Ken Paxton. And that already, I think we tracked as of yesterday in that race already $161 million, that includes the Democratic side as well, have been spent in advertising alone. And I mean, so it's 161 million and counting. So, Democrats are feeling pretty good about their chances, given that as of yesterday, President Trump came in and endorsed Ken Paxton against Cornyn. Political insiders in Washington think that Cornyn has a better shot of winning against the Democrat in the fall.
All right. Kate, just in terms of the Iran war, the Senate seemingly even more opposed than it has been now to the president's war in Iran. I mean, does that matter, even if it votes against the war?
Well, so here's the thing. It ties in with these primary races. Senator Bill Cassidy, who lost his primary over the weekend, again, to a Trump-backed opponent, he changed how he's been voting on that and has now voted with, some Republicans, but the Democrats on that. So, as more people lose their primaries, as, Senator Cornyn loses this runoff, how does he vote? And what a lot of people, Republicans and Democrats in Washington, are saying to us is that the Senate Republican majority is going to become more and more ungovernable, if you will. It's harder to corral them if you have people who are not running for re-election, those who've lost their primaries, those who don't feel as strong a bind to doing what President Trump wants them to do.
Kate, fascinating. Kate Ackley there of Bloomberg Government in Washington. Coming up, President Trump under fire after a clause in his IRS lawsuit settlement is unveiled. More on that and a look at what else is making headlines in your front page news. That's next. This is Bloomberg. Time now for your front page news. First up on the Washington Post, bipartisan skepticism of President Trump's deal to resolve legal claims against the government. The deal involves a $1.8 billion fund to compensate targets of so-called weaponized justice. Now, addendum posted on the DOJ's website says the IRS would be forever barred and precluded from pursuing unpaid tax claims against Trump, members of his family, or his businesses that arose before the settlement was reached. Next up, the Financial Times reporting EU governments are discussing whether former ECB President Mario Draghi or ex-Chancellor Angela Merkel could represent the bloc in potential negotiations with Vladimir Putin as momentum gathers to reopen formal channels with Russia. Foreign ministers will discuss options next week in Cyprus. Washington and Kyiv express support for the idea. And the Wall Street Journal reporting officials are scouring records of trades made before Trump's social media post on March 23rd to look out for insider trading. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Taking a breather, futures on the rise after stock's three-day losing streak. Yields retreating slightly from multi-year highs. Nvidia front and center, investors awaiting the chipmaker's report card amid growing competition. And state primaries, testing President Trump's grip on his Republican base ahead of the midterms. Let's take a look at these markets then, starting with bonds. As you can see, a tiny bit of relief, but we're still higher, particularly at the long end, than where we were this time yesterday, with the 30-year yield at 516.58. Look, we got that repricing last Thursday, and we haven't really ever come back from that. We were at 402, 401 in the middle of last week on the two-year yield. We're now firmly close to 410, and it hasn't changed that much in spite of this drop of 2 to 3 basis points. We're seeing that around the world, by the way, as well. A slight drop in Japan even, although the yen is above 159. Let's take a look at equity index futures and oil, because we're seeing this quite substantial drop off in oil, but it's important to note that the December contracts are still at records, both for Brent and WTI. Also notice that even though the spread was narrower yesterday, we have rolled over to the July contract on WTI. It is at 102.44 right now, and as you can see, equity index futures pointed higher. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Bonnie. Nvidia is in the green this morning ahead of its much anticipated earnings, and investors will be really keen to hear about efforts to ramp up productions and also efforts to push back against competitors. And it seems there's actually a fair bit of optimism in the market ahead of those earnings. And so we're seeing Nvidia stock up about 1.5% this morning. And of course, those results are really going to be make or break for the ongoing chip rally. And that's why we are keeping an eye on that broader chip sector as well this morning, where we can see as well a fair bit of optimism there as well, with Intel, Micron and AMD all in the green this morning. Of course, what Nvidia says about the health of the AI economy is going to be very important for those companies as well. And finally, let's end with a very different sector, with the restaurant chain operator Cava, which has reported results ahead of expectations. This pushes back against fears that there is this potential downturn in restaurant attendance because of weaker consumer spending. And so it seems that Cava is quite resilient in that market, and we're up almost 7% in pre-market trading for that company.
All right, nice move there for Cava. Chloe, thank you so much. Chloe Melly there. Stock futures bouncing ahead of Nvidia earnings. RBC's Amy Wu Silverman weighing in on what she calls a shopping spree for calls, especially in tech. She writes, in the past month, we've gone from wait and see to full-on FOMO-MOMO right-tail chase. The stats we've seen on option call buying have been nothing short of historic. Amy is head of derivative strategy at RBC Capital Markets, and she joins us now. Amy, I feel like that's been the case the last few times we've spoken. Is this market not a little concerned? Shouldn't everybody be slightly hedged here?
It's a good question. I'm a little concerned, but I think this comes down to positioning somewhat. If you've been under positioned, then your risk is unfortunately to that right tail. I can tell you from the last time we spoke, a lot more people have jumped in the pools at that all key positioning indicator. I think that is going to start to trend more towards fears of the downside. I think we obviously have to wait for the big Nvidia print to go first, but you're really starting to see signs now that perhaps momentum on that FOMO chase is getting a little frothy.
Yeah, what is Nvidia positioning telling us, Nvidia in particular, and will we get that move that we're maybe anticipating? I mean, we have seen sell-offs after earnings, even though we've seen beats for the last several quarters. Could that change this time?
Yeah, it's exactly right. The last few quarters have been very different than the quarters before that, where there was a lot of exuberance. I can tell you right now that we're in skew inversion. So just to translate that, you are seeing so much call optimism that call implied volatility is outweighing the put implied volatility. That usually indicates, a lot more momentum if things do work, be getting more momentum. We have gotten to the point where just the pure sheer scale of Nvidia makes that more and more difficult to do. I think that's why when you break down the last 8 quarters, this was happening more in the earlier quarters than they were in the next few. However, I would never count Nvidia out. I do think we have to get through this one or the other before we can determine whether momentum overall on the AI trade flags.
Amy, if we do get a SpaceX IPO this week, and obviously it's not a public company, but at what point will you be able to gauge market sentiment around that particular company? How long will it take for, positions to get put on and so forth?
Yeah, that's another great point. It's interesting. Every time we talk about where the inflection point could be, shouldn't we be worrying about geopolitics? Shouldn't we be worrying about the fact that the Strait of Hormuz is still closed? People bring up these fast track IPOs, SpaceX for one, but also Anthropic and OpenAI, all being factors that can continue this momentum train. I do think, especially when you think about the retail bid that is in the market that essentially came back, acted as another leg of the stool after April, that certainly could be something that still gives a punch to this rally. And, that's not just going to be in the next month. That's obviously going to be towards the end of the year as well if we get that other 2 big IPOs happening sometime in 2026.
Amy, is the VIX broken, or is it telling us something different now that it didn't used to tell us? I mean, we're at 18 and change. We were at 17 most of last week. And this even with, bond markets going crazy around the world, or at least repricing somewhat.
Yeah, to some degree, you do have to be concerned about the mechanism. I'll give you one really simple point, which is that the VIX is just a weighing of S&P put options, but also call options. So when you have this phenomenon, which people in options like to call spot up, vol up, but all it means is there's much more of a bid to those call options, that's still influencing your volatility, even if it's coming from the right side. So you can see VIX move because of that. But if it's because of a chase and upside, does that necessarily mean fear? So I think that translation mechanism you do have to be wary about. The second aspect of this that I would say is you still have a lot of dispersion. You still have that duck quacking. You get semis zigging one way and software zigging the other way. So on the surface level of the index, it doesn't seem like a lot is happening, but I think we viscerally know that is a lot happening under the surface, Vonnie.
Yeah, it's an interesting, explanation. You tend to just think of the VIX as the so-called fear gauge, and it really has never been that. Stocks that have ripped, you say, Amy, have notably higher volatility than stocks that are down, which means that, we could be looking at an up crash faster than we might see a down crash.
Yeah, to some degree that's happened, but one study we did was we essentially took, since March 30th, essentially the low in the market, all the returns of the S&P 500 by bucket. So, you could be down 15% to X percent, or you could be up 50% to whatever percent. When you look at those buckets and you look at the realized volatility, there's higher volatility on the upside. So, one nuance that I think it's really important to make is this hasn't been a melt up. It's been more of a crash up, and crash ups tend to be less stable than melt ups. It's not a grind to the market.
You know, it seems that this earnings season caught everybody off guard by how good it was, even though previous earnings seasons haven't been bad, right? We've had sort of good earnings seasons for a while now. It's just investors were very much more receptive to this one, it feels like, and were a lot happier when companies met and beat. But we saw massive moves in certain companies. I mean, Intel, the memory chip makers, Cisco. Is that normal, Amy? Is this a normal environment?
No, I don't think so. You certainly have seen outsized realized moves relative to implied moves. But, you know, you've also seen this commentary of everyone has managed to look through the bad for the good. To some degree, that's justified, yes. But, you know, especially when we go back to where that bond volatility has been, when you look to history, you know, that mechanism tends to bleed into equity volatility. You know, I don't think we've seen that yet, but that doesn't mean it's not going to hit. There is a part of this market that's very nervous. You have not seen it hit equity volatility or equity skew to a high degree yet, but I actually do think that it's going to happen. It's just a question of when. Until that, you know, quote unquote, when happens, the party still remains. You still have Nvidia, you still have these fast track IPOs, but I do start to think you're going to see other metrics start to pick up, like equity skew, simply because of the fact that that momentum factor is going to flag and people are going to start to scratch their heads and think about what's in the months ahead.
Cannot wait to speak to you at that point. Amy, thank you so much. Amy Wu Silverman of RBC Capital Markets. Now to other top stories trending on the terminal this morning. Goldman Sachs is said to have the lead role on SpaceX's IPO. Morgan Stanley is also listed as a lead bank. SpaceX could file for an IPO as soon as today, aiming to raise $75 billion at a valuation of more than $2 trillion. HSBC CEO George El-Hedary warning that AI will destroy certain jobs and create others. El-Hedary saying on Bloomberg's Leaders with Francine Lacroix that he is urging employees to adapt rather than resist the technological shift. HSBC is weighing deep job cuts that could impact around 20,000 roles. President Trump spares banks from an immigration crackdown. U.S. bank executives have been concerned that the president would force banks to verify the citizenship of new and existing customers. Instead, an executive order issued on Tuesday instructs regulators to advise banks on how to spot suspicious activity and determine customers' true identity. That's seen as a more limited measure. Coming up, President Trump's primary pick for Kentucky wins the race. His grip on Republican voters bolstered ahead of the midterms. We'll discuss next. This is Bloomberg.
The winner of the race tonight is not so much Ed Gallrein. I'll come back to that. But it's the Republicans of Kentucky Congressional District 4 and their families who I will be a champion for in Washington. They're the winners.
Kentucky congressional candidate and winner of that race, now Ed Gallrein, who was handpicked by President Trump. He defeated Thomas Massie in one of the most expensive primaries on record. Back with us is Kate Ackley of Bloomberg Government in Washington. How can President Trump have such bad ratings nationally and yet go into a district and basically defeat a 14-year incumbent, Kate?
Well, he definitely seems to be having this role this election cycle in Republican primaries as sort of a kingmaker. His endorsements, he's got a strong record of success now in Republican primary endorsements. We have another one that we'll be watching next week, of course, as well, where he has endorsed against sitting Senator John Cornyn. So he has another big test. He endorsed yesterday Ken Paxton against Senator Cornyn. But yeah, I mean, it's always a big deal. It's always very hard to topple an incumbent. And so obviously this was an extremely costly race. We saw a lot of outside money, including from sort of MAGA coffers, if you will, but also the American Israel Public Affairs Committee came in and spent against sitting Representative Massie, who has voted against funding for, Israel efforts in the past. President Trump had a real grudge against Massie, who had voted against his, the big, beautiful bill last year and other measures. So this was kind of a deep simmering feud for a while, but obviously President Trump and his political operation put a lot of weight against Massie in this race and came out with a victory.
Yeah, absolutely. Kate, just in terms of the war in Iran, the Senate has been signaling even more opposition to the war as the weeks go by. What's next, and can the Senate do anything more but signal?
Well, this is an interesting situation, and it ties right in with these midterm primaries that we're talking about. On Sunday, or on last Saturday, over the weekend, Senator Bill Cassidy lost his primary in Louisiana to a Trump-backed, two people advanced to a runoff there, and Senator Cassidy was not one of them, and the Trump-backed candidate did advance. So now we're seeing sort of a new independence, if you will, for Senator Cassidy, who did vote for that resolution yesterday, which was a switch in his vote. What will Senator Cornyn do if he is to lose his primary runoff on Tuesday? Will his vote be sort of up for grabs, if you will, on this and other matters? And what Republicans and Democrats, in Washington are saying, that the Senate Republican majority will be difficult to govern, difficult to stick together. If you have people who have lost their primaries, they don't feel beholden anymore to Trump and what Trump wants. And, they could be sort of wild cards, if you will, in how they vote on that, on Iran war issues, but across the board.
Kate, fascinating. Thank you so much. Kate Ackley of Bloomberg Government there. Turning to tech, Nvidia is set to report its first quarter earnings after the market close. Analysts estimating sales to have grown 80%, the fastest in more than a year. Bloomberg's Neil Campling joins us now. Neil, what should we be looking out for if you were in mind to look for red flags or even just amber flags at this point?
Morning, Bonnie. I think the questions around the Nvidia ecosystem for AI that people will be focused on tonight is for Nvidia themselves, is there any sort of guidance increase that takes into account China now, which has been discounted in previous numbers that the company reported? Is there any signs that alternative chipsets are being custom made by the likes of Google or the new ARM chips that were announced recently? Is that eating into any signs in terms of that demand appetite that's out there? The setup, as you say, the numbers themselves are huge in terms of $79 billion of revenue and 80% growth. That growth is expected, the growth rate expected to halve over the course of the next 2 years. Whether that transpires or not remains to be seen in terms of the longer term outlook, but clearly at the critical juncture of the hyperscale ecosystem. And traders are pricing in about a 5.5% move on the stock either way post results. Now that's potentially hundreds of billions of dollars. And to put it into context for you, Nvidia's market cap is far larger than the entire market cap of the country indexes individually in Europe. So bigger than the FTSE 100, bigger than the DAX index, just Nvidia's market cap alone.
Simply
So
gigantic.
just enormous numbers.
Yeah. Speaking of another giant, Samsung having problems with its labor union, how concerned should we be that we might be walking into a chip supply constraint?
It is a massive concern in terms of chip supply, the knock-on effects potentially as well in terms of the inflationary impacts that we're already worried about in terms of AI and the costs of some of these chips that have risen some 600% in some cases over the last 6 months. I think the main thing here is what happens to the fabrication plants? Do they go offline completely, or will we just be running, will they be able to run with fewer people in the factories? Because the key thing here, Ollie, is that if you take these fabs offline, it can take up to 6 months to come back under full production. And we've got demand that's so high out there right now, pricing so high as well, we just cannot afford to have these kind of supply disruption risks. So the next 24 hours for the whole AI trade are critical in terms of what Jensen says and what happens with Samsung and the unions and the Korean government.
It sounds like a Strait of Hormuz analog just for the chip world. Neil, thank you so much. That is Bloomberg's Neil Campling there. More earnings slated for today. 2 targets set to report before the bell. Let's bring in Bloomberg consumer reporter Maddie Parker. Maddie, what is Target going to tell us about the consumer?
Yeah, Bonnie, hi. It's a great question. I mean, Target, kind of all eyes really are going to be on that turnaround effort that they're trying to push for, and to see if that's still bearing fruits under their new CEO, Michael Fidelki. We know that they've been really pushing on their merchandise and on the tech in their stores as well. Analysts are expecting to see revenue increase, expect to see EPS up as well. But really, as you say, on the strength of the consumer, that is really what investors are going to be most interested in. Target, kind of their turnaround efforts have done well. Their share is up 25% so far this year, but they still have a very long way in terms of clawing back that stock price. And what investors are going to be keeping an eye out is kind of on their outlook for that own turnaround effort in terms of themselves and other big box retailers, considering the kind of business uncertainty and also that kind of subdued consumer demand that's come after obviously the outbreak of the conflict in the Middle East.
And I think Target is one of those big box retailers that's in a little bit more of a unique position because it sort of gets everybody across the income spectrum, right? I mean, of course, so does Walmart and so does some of these others, but Target is positioned to sort of appeal to everybody at its price point, not out of necessity, but just out of, interest. So there's something we can glean about perhaps every part of the US income spectrum here, isn't there?
Yeah, totally. I mean, as you say, their kind of customer base, it really kind of ranges across a whole spectrum of incomes. And obviously, big box retailers often say that at times to compress consumer demand, they're actually quite well placed, particularly in terms of that kind of value-driven proposition. We know that customers are prioritising value at the moment. But as you say, they also appeal to kind of the consumers that are at the higher end of the income spectrum. And they'll obviously be able to push forward in terms of discretionary spend, in terms of how much people are willing to spend on furniture, on electronics and apparel as well. And obviously, those people at the kind of higher end of that spectrum might be able to weather the storm that we're kind of experiencing across retail at the moment a bit better.
We get TJX today too, but we get Walmart tomorrow. Maddie, will we hear anything that we aren't expecting out of Walmart tomorrow?
Yeah, I mean, it's a good question. They kind of, I think people are expecting revenue to increase this quarter as well. Walmart have done decently, but again, as I say, they kind of, I guess people are kind of as interested as they are about how they're doing right now as what their outlook is going forward. We know that customers are kind of, they're reacting to the situation in the Middle East, as we say. But as we say, big box retailers, they do appeal kind of across that broad spectrum. So I think investors will be interested to see kind of how that kind of pans out across all their customer base.
The final piece of the puzzle on the US consumer this earnings season at least. Maddie, thank you so much. Bloomberg's Maddie Parker. Coming up, those earnings and Fed minutes on deck in your day ahead. This is Bloomberg. Now a look at what's ahead today. First up, we get earnings from Target and TJX before the bell, and then the main event, Nvidia reporting after market close. Plus, the US Treasury is selling $16 billion worth of 20-year bonds at 1 p.m. New York time. And we get the FOMC meeting minutes at 2 p.m. New York time. That'll be a fascinating insight into the various strands of FOMC thinking. Some micro movers now before the bell. Cava up more than 7%. It had a beat and a raise, defying fears of a downturn in the restaurant industry. Toll Brothers is an interesting one, up another 2+% on earnings mover there. Now, obviously, Home Depot wasn't so great yesterday, but we did see those pending home sales come in better than expected. Orders, says Toll, hit the highest in 2 years. And Intel is up more than 4% now after the management team spoke at that JP Morgan conference. Analysts positive on the presentation on what's ahead for the company. This is your macro picture going into your Wednesday session. Crude a little lower. We've moved over to the July contract. S&P futures pointed higher. Tiny bit of relief in bond markets. That's it for Bloomberg Brief.